Hey guys, this is Vyom Joshi with Superior North. Welcome back to my channel. Today we will be talking about Kronos Worldwide, which is engaged in marketing and production of titanium dioxide products. In this video, we'll review the company's fundamentals and try to find the intrinsic value of this company. So let's dive in and review Kronos Worldwide. Hey guys, I'm on QuickFS looking at Kronos Worldwide Inc. The stock closed at $8.73 as of July 1st, 2023. The current market cap is about $1 billion. Looking at the business description, Kronos Worldwide Inc. produces and markets titanium dioxide pigments in Europe, North America, Asia Pacific, and internationally. For the 2022 sales, 99% of its sales came from its titanium dioxide pigment sales. 65% of the sales came from European and Asian markets. 35% of the sales came from the North American markets. The company has more than 4,000 customers in about 100 countries. As far as ownership is concerned, KRO Simmons Trust owns about 80.9% of the common stock outstanding. 18.6% is owned by institutional investors, and only 0.5% of the float is available to the public. And that is why Kronos Worldwide trades more like a private company than a public company due to the limited number of shares outstanding for the public. Looking at the key statistics, the company's current PE ratio is 31.4. The price to book is at 1.1. Price to sales is at 0.6. And the price to sales is about 0.7. The 10-year median numbers show that the company's return on equity was about 11.0%, return on assets was about 5%, and return on invested capital was about 7.2%. Next, looking at the company's revenue, back in 2013, the company brought in about $1.7 billion in sales, and for the year 2022, that number was about $1.9 billion. Next, looking at the gross profit. The gross profit is what we get when we subtract the company's cost of goods sold from the company's revenue. Back in 2013, the company's gross profit was $112 million, and for the year 2022, it was about $391 million. Over the past 10 years, the company's gross profit has hovered from a low of about $112 million to a high of about $570 million. As far as the gross margin is concerned, which is the ratio of the company's gross profit to its revenue, over the past 5 years, the company's gross margin has stayed above 20%. Next, looking at the operating profit, this is the amount of money that's left with the company once it pays for the cost of goods and operating expenses. Back in 2013, the company had an operating loss. In 2014, the company's operating profit was $147 million, and for the year 2022, it was about $148 million. Ever since 2016, the company's operating profit has been positive. Next is the operating margin. The operating margin is the ratio of the company's operating profit to its revenue. So it gives us an idea of how much money is left over with the company once it pays for the cost of goods and operating expenses. Back in 2022, the company's operating margin was 7.7%. What this means is every $100 that the company made in sales, by the time it paid for its cost of goods and operating expenses, it had $7.7 left. Next is the earnings per share. Back in 2014, the company reported 86 cents per share as its earnings. And for the year 2022, its earnings were about 90 cents per share. Over the past 10 years, we can clearly see the cyclicality in the company's business, as the earnings per share have fluctuated between a high of about $3 per share to a low of about negative $1.5 per share. This cyclicality in the earnings per share makes sense because of the inherent nature of this business. Kronos Worldwide sells titanium dioxide, which is used in industrial products, and those industrial products are going to be dependent on the GDP of the global economy. So if the economy worldwide does well, then Kronos is going to do well. And if the economy worldwide is going to worsen, then Kronos sales and hence its revenue is going to taper. Next is the dividends per share. Back in 2013, the company paid out about 60 cents per share as dividend. And for the year 2022, it paid out about 76 cents per share as dividend. Over the past 10 years, the company has paid out consistent dividends. Now let's look at the key ratios. Looking at the returns, the first one on the list is the return on assets. This is the ratio of the company's income to its total assets, so it gives us an idea of what kind of income the company is able to generate given its asset base. Back in 2014, the company was able to generate a return on asset of about 6.1%, and for the year 2022, it was about 5.3%. Next is the return on equity. This is the ratio of the company's income to its shareholders' equity, so it gives us as an idea as shareholders what kind of return can we get on our investment. Back in 2014, the company's return on equity was about 11.6%. For the year 2022, it was about 11.4%. Ever since 2016, the company's return on equity has stayed above 10%, except the year 2020, when the company's return on equity dropped to about 7.9%. Next is the return on invested capital. This number gives an idea of how good the management is at allocating the company's capital and getting a return on that investment. Back in 2014, the company's return on invested capital was about 8.8%, and for the year 2022, it's about 7.6%. Kronos Worldwide has a weighted average cost of capital, which is 7.14%. And since the company's return on invested capital is greater than its weighted average cost of capital, we can safely say that the management is creating value for its shareholders. Next, looking at the company's capital structure, the first item on the list is the asset to equity ratio. This number gives an idea of how leveraged the company is. An asset to equity of 1.0 tells us that all of the company's assets are financed by the shareholders' equity. An asset to equity of 2.0 tells us that half of the company's assets are financed via liabilities and half of them are financed via shareholders' equity. So ideally, we want to see the company's asset to equity to be staying fairly consistent or declining. Definitely, we want to see the asset to equity to be 2.0 or less. Over the past 10 years, the company's asset to equity has stayed fairly consistent. It has trended down from a high of 3.0 in 2016 to a low of about 2.0 in 2022. Next is the debt to equity ratio. This ratio compares the company's debt to its shareholders' equity. Ideally, we want to see the company's debt to equity ratio to be less than 1.0. It's even better if it's less than 0.5. Back in 2013, the company's debt to equity was at 0.2, and for the year 2022, it's at 0.5. The company's debt to equity ratio has been trending down ever since the pandemic when it got to about 0.6. So overall, the company's capital structure shows that the company has liabilities and debt. However, it's not to a point where it's a cause of concern. In other words, the company does not seem to be taking on more and more debt in order to finance its future growth. Now let's look at the supplementary items in order to find the intrinsic value of this company. The first item on the list is the company's free cash flow. Back in 2013, the company's free cash flow was about $63 million. And for the year 2022, it's about $19 million. We can see that the company's free cash flow is not steady, consistent. It has its fluctuations. So we can't really use just 1 year's data to predict the company's free cash flow in the future. We have to use the 10-year average, which in this case turns out to be about $79 million. So for our no growth perpetuity model, we'll use $79 million. We'll divide that free cash flow by the discount rate, which in this case I'll use 10%. It can be an arbitrary number. I'm just using the company's weighted average cost of capital, which is 7%, adding a 3% margin of safety on top of that, and coming up with 10% as my discount rate. So what we get is free cash flow, which is $79 million, divided by the discount rate, which is 10%, is equal to $790 million. So the way to look at the $790 million pile is if the company were to be able to generate $79 million every year from now into perpetuity, the company's intrinsic value would be equal to $790 million. Now, this $790 million can be thought of as the company's earnings potential in the future. If you look at the company's book value, which now focuses on the company's balance sheet, for the year 2023, the company's book value and tangible book value was about $957 million. You can think about the company's book value as the company's total assets minus total liabilities. So it's the amount of money that's left over with the company once it pays off its liabilities. And if the company were to liquidate tomorrow, it is not going to be worth the company's book value or tangible book value. There's going to be some amount of markdown, some amount of discount to that book value. And just to be conservative, let's just assume that the company's book value is marked down by $557 million. In other words, the company's true book value, the true tangible book value, is about $400 million. So if you tag on the company's no growth perpetuity intrinsic value of $790 million plus the $400 million that the company's assets are worth, we get about $1.2 billion as the company's true intrinsic value. Earlier, we saw that the company's market cap was $1 billion. And if the company's intrinsic value is about $1.2 billion, then we can see that the company's current stock is undervalued. Hey guys, that is all I had for you this week. Hopefully you found this video on Kronos Worldwide interesting. If you like this content, please do like, share, comment, and subscribe. And if you have any suggestions on which stock I should review next, please leave it in the comment section below. I'll greatly appreciate it. Thank you.